Alright, welcome inside of my screen to yet another weekly focus on GBP Now, this particular focus, I'll be looking at the very higher time frame, which is the 3-month chart, and 3 months chart is the quarterly chart. Every quarter of the year, that's what you're seeing right here. So, looking at the 3-month chart, there are questions I like to ask myself when I am on the higher time frame. There are sensitive questions I like to ask myself when I am looking at the higher time frame charts. Why? Because these questions help me, they give me a guideline to what to expect. Alright, so I like to ask myself on the higher time frame, like, am I seeing a clear draw on liquidity? Now, draw on liquidity simply means where price is easily going to move towards to, like, price will find what's low resistance to move towards that particular direction. That's draw on liquidity, and you can see right here that my draw on liquidity is what this old highs on the 3-month chart. Now, after that question has been answered, the next question I want to ask myself is what is the bias and the narrative? Now, bias meaning the direction of the market. Are we bullish or we bearish? So, if I'm bullish, now why? Why am I bullish? So now, my bias on this 3-month chart is what's bullish. I'm expecting higher prices. Now, why am I expecting higher prices? If you look at the 3-month chart very well here, you can see the price is respecting what's lows, and we are breaking and closing above old highs. So we are respecting what's bullish key levels, and we are disrespecting what's bearish key level. You can see how price disrespected this gap. Normally this gap is meant to do what? Continue the downtrend, but the gap failed to continue the downtrend, and normally these lows are meant to do what? Reject price higher, and you can see how price rejected from these lows. So I'm safely in a what? Bullish uptrend. So the next question I want to ask myself is what is the key level that is likely to be used to move price higher? And the key levels I focus on are what? Highs and lows. This is a high and this is a low. And order block is a candle that stab into a what? Previous liquidity pool, and once that particular candle is being closed above or below, it becomes an order block. So a good example is this down close candle here that stabbed into this previous liquidity pool, and we aggressively closed above it here and here. So automatically this is a bullish order block, and you can see how it has been offering support through supports, acted as a support here, to the upside. So the key level that is what's likely to push price upward is this up close candle, which is a breaker. So I focus on highs and lows, order block, and breakers. Those are the 3 key levels I focus on mostly. So fair value gaps I really don't pay attention much to fair value gaps. I expect liquidity to be created around fair value gaps. So this particular candle is a breaker. Why? Because if you look down here, we had a low, we had a swing low here, this low that created this high, then price came back and took a low, then we aggressively close above this particular high. So it's making this one particular candle a breaker, and you can see how this current quarter, which is the 3rd quarter, did open, dump into the breaker, and started rejecting it. So on the 3-month chart, I already have a key level that is doing rejecting price, and it's offering supports to the upside. So this is a key level that is offering supports to the upside, this breaker. On the 3-month chart, very high time frame key level that is offering support to the upside. So this is a what breaker, the plus BROK, abbreviation of the breaker. So now, since I've been able to answer my questions, which is let me write it out. X. So question number 1 is so let's go. Question number 1 is what's the DYOR, which is the drawn liquidity. Then question number 2 is what's the bias? What's the bias and narrative? What's the bias and narrative? That's question number 2. Then question number 3 is what is the key level? What's the key level? Key level that is likely to be used. So these are the questions I like asking myself on the higher time frame whenever I'm looking for a trade idea. So once I answer these 3 questions, then I can now move to the lower time frame, monthly, weekly, and daily, to look for a trade idea, preferably time and total soup trade idea. So let's go to the daily. Let's go to the monthly first of all. So on the monthly, I'm still looking for reasons why I should be bullish. And you can see on the monthly as well, we are still respecting what's old lows, which is here. We respected these lows and we're breaking above the high. So on the monthly, what is the key level on the monthly that is likely to be what's used? You can see this breaker here, the same thing on the 3-month chart. Low, high, lower low, higher high. Price came and closed above this high that took these lows. So this particular up close candle is the words breaker, and the 50% of the breaker is being respected here. You can see how July did what dumped into the breaker and tricking everybody that price is bearish. And after that, August did what took out July lows into this key level, which is the fair value gap, just touched the high of it, the higher portion of the fair value gap, and rejected. So on the monthly, I am saying that the narrative is what's bullish. Why we are going up is what's bullish, because price is respecting what's bullish key levels and disrespecting what's bearish key levels. So I can safely look for what's buying opportunities on the weekly time frame. And myself in particular, I'm a weekly range trader. Now, what is a weekly range? A weekly range is simply the opening price of a weekly candle, the high, the low, and the closing price. That's what makes up a weekly range. So I like trading the weekly range, where I'll look for entry if I'm bullish around the low of the weekly range, or at the opening price of the weekly range. Then I hold the Friday close or Thursday New York section. So on the weekly chart, you can see how price is respecting old lows, which is here, bullish PDRs, and closing and breaking and closing above the previous week highs. Now, this particular low, price did broke and closed below it here, but immediately after we broke and closed below this low here, the next week did what close back above the low, which is this low here. So if we mark it out with a broken line instead of a firm line, mark it out with a broken line, you can see how the price did what broke and closed below the low, and immediately we came back and closed above it, making this particular candle was a bullish order block. making this particular candle was a bullish order block. Why? Because this candle did what? Took out liquidities here, and it took out liquidities below this candle, and it was supposed to take out this liquidity as well, but it fell, and the next week did what? Closed above it, making it a bullish order block. And moving on, you can see how the previous week before this week, which was NFP, did what? Took out liquidity into the key level, which is the order block, dip into the order block, and rejected. So this particular week being CPI week, I'm expecting higher prices to take out this high first, then come and take out this high. So moving on to the daily. Now you can see how I'm building my trade idea and plan also. And on the daily, you can see right here how price dumped lower into this low, but it failed to take out this low. It failed to take it out, and we respected the rejection block, which is the closing price of this candle and the opening price of this candle. Those are the rejection block, and you can see how price respected it, and we expanded away from it and taking out this highs. So what is the next thing to look out for on the daily is what I want to see price do what? Dump below old lows, which it did here, and after we dump below those old lows and price respected those lows, and that right there I can look forward buying opportunity. And also price did what? Took liquidity below the 50% of this expansion, so it is a good area to look forward buying opportunity, since we are below discounts of this expansion leg and into a key level, which is this fair value gap, and price took liquidity around there, and we expanded higher. So if you're not in any trade, like if you're not in any buy position at the moment, you can simply wait for this high to be taken out. Price should take this high out, aggressively take this high out, and wait for the retracement to create another low, and you buy from the low. Or the second scenario to expect is Tuesday to do what? Come and touch soup Monday low, like take out Monday low and expand to the higher, to the upside. But that scenario is unlikely to happen because we've already taken what liquidity is below this low. We've already swept this low and price is aggressively bullish. So I myself am in a buy position in somewhere around here. I'm in a buy position in somewhere around here. Yes, around this area I'm in a buy position, and I can show you that. Yeah, let me just go to my MT5 MetaTrader 5 and show you my buy position on GBP USD, and you can see that's my buy position. I'm still holding it till price does take out this high first, then I'm looking to do what? Hold the price take out this high. So that's my position. So back to the analysis, and that's that for this trade focus. So a quick recap on how I look for trade ideas. So on the higher time frame, I want to ask myself questions like, what is the drawn liquidity? Where is price heading to? Am I seeing a clear direction that price is heading to? The next thing I want to ask myself is, what is the bias and narrative? Are we bullish or bearish, and why am I bullish or bearish? The next thing I want to ask myself is, what is the key level that is likely to be used if I'm bullish to push price higher? So once I answer this question, then I can safely go to the weekly and daily time frame to look for time and total soup to be in alignment. So thank you for watching to the very end of this video. Please like, subscribe, and share. I love you.